The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Welcome to the show today from the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. We're going to start out today with silver because that's had one heck of a move overnight. We got up and made the beautiful ABCD pattern that you're seeing here with the 3 drive to a top pattern at the 1639 level where we took out the October highs. Then silver backed off about 10 or 12 cents. During that time, gold was down $25 and continuing to drop. And as it was going down, silver wouldn't even make a downtick. I mean, it was certainly apparent that, you know, somebody was really ready to buy silver. And then about 1 o'clock in the morning, I believe New York, it was about 12:30, 1 o'clock in the morning New York time, someone came in, and it was a very thin market at the time, but they took silver off to the races. They ran it 80 cents. Without stopping. There were hardly any downticks during that move. It was just a phenomenal move from 1640 all the way up to 1682, and then it backed off a little bit and then went up to made 1696, which happens to be the 786 retracement on the long-term daily charts. Now, whether that means anything or not, you know, I'm not sure. But with that wide-ranging bar that we had today of over 45 cents, that's a very unusual bar. In fact, it was done at such an unusual time of the morning. It was very just rather unusual. But these are unusual times that we live in. Anyway, these patterns, when they fail, you have to, you know, literally make sure that you don't stand in front of some of these things, because they can certainly go a lot farther than what we would like to think they're going to do. So we'll just keep this in mind as we're looking through the charts that we're going to be watching today. By the way, tomorrow I'm going to have Richard Mogi, formerly the director of the Foundation for the Study of Cycles, worked with Paul Tudor Jones for many years, and is living in Pennsylvania right now, and he'll be our guest tomorrow at 9:30 with some pretty good cycle stuff, which is also, you know, very, very interesting. Remember, folks, we've had these folks on here starting last week talking about the importance of the 15th and the 18th of April, and we ought to give them the benefit of one day, because we did get a little bit higher than we were last night. The main reason for that strength, I believe you'll see this when I post this, this is the German market. This is the one that really pushed the whole thing so much higher from our market, because we were about unchanged to down a little bit, and then right after Germany opened, we really took off along with the German market, moved well over, you know, 200 and some points in just a matter of a short period of time, and went up to the 61% retracement at that 104.13 level. And then some German data came out, production data that was very, very bullish, and yet the market, you know, sold off just a little bit after that. It's now trading just a shade under 10,400, which is the 61% retracement. We had the same type of situation occur in the Hang Seng, where we went up and also tested the 61% retracement of the last highs that we've made, you know, several months ago. So all those are still holding up within the same context. So whether this is going to be a key day in the market or not, I don't know. We do have the full moon with the lunar syzygy, which means that we're going to be at apogee. The Earth is going to be as close to the moon as it's going to get, and that'll be on the 21st. That also increases seismic activity, as we were informed by our good friend Norm Winsky from Astro Trend. So we'll watch that very, very closely also. Now, I've had a couple of questions. One was about the head and shoulders pattern that we have possibly going in the in the NASDAQ on the weekly basis. And remember, this is a weekly chart, folks, and this is only the second day in the week. The way you figure that out, folks, is Monday is the first day and Tuesday is the second day. I'll proceed with that mathematical calculation on Wednesday, which you'll never guess what day of the week that is. That's the third day. Okay, this is the chart that we're looking at of a potential head and shoulders pattern. We have gone just a few points higher than the 78% retracement. We were trading about 10 or 12 points higher than that. What that is not much, given the fact that how these markets are moving so much, because we had that big outside day yesterday where we were lower, and then the market moved higher. So this pattern is still in effect. The question is, how do you know when it's wrong? And the answer to that is if we get above 4,600 in the NASDAQ, that would certainly tell us that this most probably is not going to be a valid head and shoulders pattern, but you really need to give it a little bit of time, to unfold, and then you'll have a better idea of what's going to happen at that particular time. Last night, we had a 61% retracement in the crude oil from the high that we made back at 42 and change just a few days ago. Then we broke into that broke down of the meeting from Qatar on Monday or Sunday night, and then the markets rallied 61% of that back up to the 40.50 level. And as long as that 40.50, 40.70 level holds in spot crude, we should be looking at a little bit lower prices in oil if that's the case. I think that, well, not I think, but if you look at the fact that they always talk about how oil and the stock market move together, that has not been the case over the last 3 or 4 days. So there's certainly something else out there that makes the market move as much as it does, whether it's the Federal Reserve or not. That's a question for the ages and for debate. And so we'll let the folks debate it, but somebody makes the market go higher because there's more buying and prices are going up. So we'll watch it very, very closely. I'm still watching those 100 stocks, and I haven't seen much difference in the patterns. Even with yesterday's action, not a lot happened other than with the stock indices, and of course, those are the ones that people are watching, very, very close. We are coming into this, one of our friends here in the den, Marshall, talks about seasonality, and that is we have a situation where we have, sell in May and go away, which is one of the stronger seasonals in the market that's coming upon us, very, very quickly. And we're having a market that's making, we'll put this up again that we talked about yesterday, and that was the work from John Murphy, where we have this market making new advanced declines lines into this high. We haven't made these highs since, in fact, the advanced decline line has probably been one of the better timing indicators, because as it's making new lows, the market, we've got to take a break here. We'll cover this when we get back. 877-927-6648.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're talking about John Murphy's chart of the advanced decline line. And if you'll see what it's doing right now is we are taking out the highs from May 19th. That means that there's more advancing issues than declining issues on a percentage basis, and also on an actual basis. But that the stocks themselves are only making a 61% retracement from that level, as we've seen in the New York Stock Exchange Index. We're just a tad above the 61% retracement as of the close yesterday because of the big outside day that we had, following the collapse of the oil talks and then the market, turning on top of that. So it's still active, but we've had some, like I mentioned before, we've had some pretty smart people on here. Bill Meridian, Norm Winsky, Shane Smolian, Bill Koval of WD Analytics. And so, they're all saying that this market is, extremely overbought and ready to turn down. That doesn't mean it's going to turn down. It's just, it means that some smart people think that it's turning down. Regarding this chart from John Murphy, if you'll go back historically and do this yourself, like Jim Twentyman says, defy human nature, do the work yourself. Go back and look when this thing has made new highs, when the advanced decline line has made new highs at key market points. If you go back to May 19th, if you go back to 2014, if you go back to 2011, when it was also making records, you'll notice that that's when the market turned. On the opposite side of that, back in March of 2009, it was just the opposite. Yeah, we had more. In fact, we didn't have any new highs. Everything was making new lows, and that was the bottom of the market. So it's actually a pretty good indicator for a potential market turn. We do have, as I mentioned, to start the show, we have the full moon, starting on the 21st. That kicks in sometime late today, the start of it anyway. And then we also have the moon going to apogee, which is as close as it gets to the Earth, which adds a little extra geomagnetic pressure, to the market. So we'll see how things are moving along through this area here. Now, the Treasury bonds have started to move lower. There is no, that's what's quite unusual, is the fact that, no one wants to be in the bonds anymore. Last week, everybody wanted to be in them, and now they've switched, and nobody wants to be in them. But there's a really strong support in the June bonds at that 164 level, folks. There's a huge ABCD pattern there, so you should pay particular attention to that, because if that pattern holds, that could be a switch of what's going on, in the markets to, to keep an eye on that. Right now we're trading at 165.08, but that number comes in at 164, which is, quite a bit, lower from where we are at the present time. So that's what we're looking at as far as the overall, picture of the market. As I mentioned before, this whole thing started with the German market. It just literally came out of the box and just exploded to the upside. And we were down in our futures, and then immediately, as soon as Germany started to move, we started to go higher. The Hang Seng didn't do very much. It opened lower and rallied a little bit, still closing below the 61% retracement. So we're just over a critical period here. So it's pretty hard to be a buyer when the market's been up, 9-10 days in a row. Historically, that's not a very good bet. So watch it. But again, look at silver. Silver's had 13 weeks of higher bottoms, for heaven's sakes. And unfortunately, I'm trying to buy gold that it never got down to my price. And yesterday, I was watching it at the 1230 level, right at the 786. It stayed there for well over 3 hours. And I was thinking of buying it. I ended up going to sleep, and the next thing I knew, when I woke up, it was $20 higher. So you can't always stay awake all the time. We've had a question about the soybean market, and one of the things that we're watching in the soybean market that I don't have a chart for, but at least I can discuss it, and that is that we are approaching a 61% retracement in the nearby beans. That's May and July beans, about a nickel higher than where we are right now. So keep an eye on soybeans if we make a slightly higher high today, and don't run away to the upside, because that could be really strong resistance. This goes back well over a year, and you want to pay close attention to it. It's within a nickel of where it is right now. So watch that one also with a very, very close eye. So that's the way I'm watching it. So we'll see if this continues to move along. We've had another big move here in silver since we've been on the air. We've jumped another 17 cents. We got up to 17.06. In fact, that's our high of the day right now that we're setting on it. And gold's just hit the 78% retracement at the 1256 level. That's the 78% retracement coming off the high of April the 12th. But it's certainly still looking relatively bullish. I mean, I miss this puppy, boy. I tell you, I did really good with the notes and the bonds and the euro, and but boy, oh boy, I just can't understand. I know what I did wrong, and that was that I had my mind focused on that 1190 area. I did so much work on it that I really had my mind focused on 1190 in the gold, and I wanted to be a big buyer, a buyer there. And it just never got there. As low as it got was, 1225, which is a, good $35 from where I wanted to buy it. And now it's had a pretty good run. The $64 question is, where do you go from here? And you just have to wait to see what the next swing is going to be. The ABC on this measures back to the old high, at 1286, and then we'll, look to see what happens. We did have a 3-day correction into the 14th of April. That was at the 786, but again, I wanted to focus on the level of 1191, and that just got me off my game. There's a situation where you have an opinion on something, and you should change your opinion. And that's much better than sticking to it, because when you're wrong, you've got to be able to be flexible. This I didn't do. So thankfully we had Mr. Z in the room, who was very, very bullish to silver and was able to take advantage of this whole move to the upside. So thank goodness we have so many smart people in our Tiger family that helps people move along here. So we'll see what's going on with some of these other things. We've had a request to talk about the IWM. That also is really starting to move a little better. We're getting up to the 786 retracement in the IWM. It's still been in a downtrend, but it's basically having a pretty good rally after the ABCD pattern that we had back on February the 8th. So there's another one that looks like we're making these three lower tops here, which is basically a 135 pattern in the IWM. So if you want to pick one to sell of any of the index, the IWM would be the one to sell because it's the weaker of the group. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have a caller from Toronto, Canada. Edward, are you there?
Yes, I'm here, Larry. How are you?
I am very good, sir. How can I help you today?
Just want to share a couple of my observations and see, like what you think about it. Basically, I'm looking at ES, S&P Mini, and I'm reciting in my head the definition of the uptrend, which is higher lows and higher highs, and definition of the downtrend, lower highs and lower lows. So I'm looking at the monthly chart, And it looks to me like we basically penetrated 786 point of retracement, but the high is 2134 by my calculations, the way I see it.
That's
now, on a monthly, it looks we're still in an uptrend, and it's bullish. On a weekly time frame, it looks like we are in a downtrend by the definition of the trend. And again, we have penetrated 786 retracement, but again, the high point is 2134. Now, looking at the daily time frame, it looks like basically we are testing. Maybe we are going to still test the highs. And the low point, the real low point on daily, by my calculations, what I see is 2026. So basically, if it penetrates 2026 to go, and it goes to 2025, I think it will break the uptrend by the definition of it, and there is a potential then it's going to start going down.
That makes very good sense, and I think you've analyzed it correctly, starting with the longer term, going down to the shorter term. We do have some patterns that are, also occurring there with the 3-drive pattern on the 4-hour chart that's still present. But you're absolutely correct. The old high was that 2134, and frankly, if we get above that one, it's time for this old cowboy to circle the wagons, get in the old chuck wagon, hop on my little trusty mule Guido, and head out into the desert, because I'll have to throw all this technical stuff out the window.
Yeah. It seems like I was listening to some of the ideas of Larry Williams, and it looks like he believes that we're still in a very strong bullish uptrend, regardless of all the other patterns. And he also talks about seasonality, because by season and the tax season, that now everybody seems to be paying taxes, but usually that affects historically with the market to go up.
Yes, he's very strong on seasonals, and he's doing a webinar on Thursday. If you folks get in touch with him that are listening, Larry does a great job with his webinars. He's one of the real premier people and technicians in our business. So if you get a chance, you go to Larry Williams' website, and you can get a free webinar for, I think it's about an hour and a half. And it's really, quite a great deal of information. That's all I can say, that I wouldn't miss it. I'm not going to miss it, so I would suppose most people wouldn't want to either.
Yeah, he also, I think, mentioned that the last 17 or 18 years at this time of the year, the market has been going up. So, he's very big on, looking at this history, I guess.
Seasonals and historicals and patterns, that's his specialty. He doesn't do anything with fundamentals because he's a pure technician, but he does. And there's only a few people that are at his level that carry so much information with him. Steve Moore out of Portland, Oregon, is in Larry's class, but Larry is really in a class all by himself as far as those seasonalities and historicals that he has. He does a fabulous job.
I respect him very much. I think he's a very smart man.
He is, and he's a very nice man and a very philanthropic man. He gives a lot away, so he's a super guy.
All right. Thank you very much, Larry. You have a beautiful day, and attitude of gratitude.
Yes, and an attitude of gratitude. Amen to that. Thank you for calling in, Edward. I certainly appreciate it.
Thank you.
You bet. Okay, I did post the chart of the Dow Jones that we were looking at on Monday. That showed that big ABCD pattern that we had. This does not include the down move that we had Sunday night, because this was done on Saturday. We did have the down move, and then we had the new up move, and all the up move did was go up to the 1.618 expansion of 2 and 3. I don't know if that's going to be the higher now, but that was at 17,000 990 in the futures for the Dow Jones. So we'll be doing kind of keeping an eye on that. Remember, this is the second day past our days between the 15th and the 18th that are so important. So, give it a little bit of time here before you go, just buying blindly onto some of these things, because some of these stocks still look, extremely bad, and that's the that's the thing that we want to keep an eye on, what's going on, and we'll see what's going on with some of these things. We're having a pretty good rally in copper today, along with the gold and silver. Many of these metals, once they start, they pull everything else up with them, and that's exactly what's happening today. So we'll see how high it's going to go, and then this, I've been very, very bullish gold, and I did okay for most of it. I shouldn't complain much, but I hate to leave anything on the table. One of Mark Douglas's favorite fears, but it'll give us another chance to get in. I just focused too much on that 1191 area, and that prevented me from buying at that 786 at the 1230 yesterday, and it stayed there for 2 hours, and I was just really reluctant to buy it. But anyway, we'll see. We'll move on. Just one thing. There's plenty of opportunities out here, so we'll be sure to take a look at those as we go through. One of the stocks that's under a great deal of pressure recently has been Goldman Sachs, and today Goldman Sachs is down about 1%. Again, due to some type of a report that's out there, but it's a much weaker than market stock. And certainly it has to get above the 165 level for an order to Goldman Sachs to even begin to think that it's in a turning of a complete uptrend. So we'll watch the Goldman Sachs. But 165 is the number on Goldman Sachs. If we exceed that, then we will keep an eye on what's happening with it as we go through. The same thing with Starbucks. It's a little weaker than stock market. We've had these lower highs in Starbucks. It's also one of the FANG stocks, and it's also been able to, one second here, I had a little bit of a problem. I can't do that, doggone it. I was going to show you, we did open sharply higher in the soybeans. We did get a trace beans now, so they might be off to the braces. We'll have to wait and see.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I've been asked to take a look at the New Zealand dollar, the Kiwi. If you'll notice here that we've had a beautiful Gartley pattern form back in January down at the 63.80 level. We're now rallying up to make a 1.27 expansion of this and also a 50% retracement of the high from last April. That makes two ABCD structures and also a 3 drive to a top pattern, all coming together at around this 750 to 770 level in the New Zealand dollar. So watch this one with a great deal of anticipation, because this market is still in a long-term downtrend, even though it's turning on a shorter time frame. The very long-term weeklies are extremely bearish, and we do have a whole bunch of numbers coming up here between 70, 50, and 77 in the New Zealand dollar versus the U.S. dollar. So it could, and again, these things, if they accelerate much above 7,100, it's telling you that this pattern is certainly wrong, and you don't want to stand in front of it. One of the things that we talked about on last week was the head and shoulders pattern that we had in the price of Visa. And if you'll notice here, it lined up really perfectly last Wednesday. And then what happened, the market gapped up on Thursday, as you can see here. And that was telling you, because we were at a perfect 786 for 3 days at the area of around 78 and change. And then on the Wednesday of last week, the market gapped about 80 cents higher at the 79.38 and then continued to go higher. That pretty much told you that that head and shoulders pattern was failing for 2 reasons. One, you went above the 786 and you did it with a gap. So when you see those things, gaps are unknowns. And when you have those, you have to ask yourself what's causing this gap, but you certainly don't have to play in the game, so you can just stand aside until the gap presents itself with a better opportunity. But when you see these markets gap above these levels of support or resistance, boy, that really means a great deal. So remember, gaps are another way of the market to tell us that there's something dangerous out there, and you must respect that, because what we would have here now in this Visa chart would be a potential 3 drive to a top up around the 84 level. That would take it into a 1.27 of that whole move between November and February to the downside. So that's a long way to go. Now, whether these moves are going to continue or not, remains to be seen, but we are over some really heavy cycle stuff that started on the 15th of April, and it ends actually tomorrow when we have the full moon coming in, and we'll see if this lunar phenomenon is going to be enough to see us maybe get a 2-day correction in stocks. Who knows? It's still a little bit early, but we'll be able to see what's going to happen. We did make the 786 retracement in the gold up at that 1257 and change. We didn't get much above it, which is kind of surprising considering, silver is, in a parabolic move to the upside, but that's neither here nor there. They're just numbers, and they're still early in the day, and you don't want to, stand in front of it. We do have one other currency that looks really interesting at the present time. This is one that we were watching last night because of the fact that we had this pattern known as the 135 pattern, and it has told us that we are, in a certainly a shorter term uptrend, and now we've reached the 61% retracement here in the euro up at this 1.1375 level. We're within about 8 or 9 pips of that exact price, so kind of watch that, because that could be an interesting trade, selling that 61% retracement with those butterfly patterns that we have forming along with the 3 drive patterns. So the risk at that point, you'd only risk about 30 pips, so the 113.75 should hold it, but we'll be able to see what's going off. Some of the sectors that we're watching, are still acting relatively weak. The IBB, the biotechs are down $3 today. IBM is down after it hit the 61% retracement yesterday. It's dropped, I guess, $4 in IBM. So not all stocks are participating, but remember, it's mainly those 100 stocks that are making all this stuff happen. The overall stock market is not really doing anything near what the Dow Jones is doing, and then also what the NASDAQ is doing. And of course, the NASDAQ is still the weaker of the 3 indices because it's still hovering at that 78% level. So don't get too bullish in here, folks. We've had a heck of a run here for the last few days, and there's no sense chasing it. But sometimes chasing it is the way to go, I guess. I've never had any luck doing it, but other people have, I guess. So you just have to wait and see, what the trading gods are going to they're trying to bring you. One other thing on the currency front here is the Canadian dollar. I wanted to bring this up and show you. We had a beautiful 3 drive to a bottom pattern here last week, and then the market had a pretty strong rally of several hundred pips, around 240 pips. It gapped higher on Sunday night because of the fact that the oil market was under a great deal of pressure, and then of course it totally collapsed, and now it's setting up an expansion number down at the 126.30 level to 126 even, and that's just nothing more than expansion of those last 2 swings, because all these things occur by expansion and contraction. As you can see here, we're expanding to the downside, so that would give us a price level to look for value down around the 126 to 126.30 level, in the Canadian dollar versus the US dollar. The best way to do that, because the market's coming down so strong, is to wait, to make sure that the bottom is formed. Give it 8 hours so you can see 2 bars holding at pretty significant support, and then you can, make your buy and risk, somewhere around 40 pips to do that. That's the safest way to do it. And whether that is what you would like to do or not, I'm just telling you like I see it, and whether that's going to be right or not, it's just a pattern. There's not much else you can look at, so we'll have to wait and see. I saw an interesting statistic today from our good friend Basil Chapman, and I believe he mentioned that the SPX has had its biggest run on a weekly basis ever. I think that's exactly what he said. I'm trying to find out where the darn thing is, if I can go back here and scroll. And well, anyway, when he's on there, you'll be able to see what he said, because I'm going to ask him because here it is. The S&P has been in a run that it hasn't seen ever. In other words, it's had the best weekly run that it's ever had. I'm going to ask Basil to expand upon that, because that's an outlier event. You'd like to see those things occur. That's the real thing. We'll see how this works out. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I was just informed that the IBM is down better than $8 a share. The Fibonacci number on that was at 153. We got to 153.11, and well, that's a heck of a move in one day. There must have been some good news on IBM on the negative side, as they say. Anyway, I've posted the chart of the New York Stock Exchange Index, the long-term weekly that we use as our gauge. We are still completing that 61% retracement. We are over what I believe is a very significant cycle high that started on the 15th. This is the 19th, so this would be the last day for this, because it only has a 2-day orb. In other words, it must work within 2 days of the projected low. So you want to keep an eye on that. If we do start down, this could be the reason for it. We do have a bunch of ABCDs there at that time, so we'll watch it. Watch it very, very closely. There is a lot of activity today as far as in the grains and in the metals. There's a lot of commodity buying at this point, so we'll watch it very, very closely. But again, that New York Stock Exchange Index one is the one that looks the most bearish on a long-term basis. And in fact, if that happens to make new highs, then there is something really drastically wrong with this analysis that I have on the bearish side, but that remains to be seen. We'll see if this is going to continue on forever or not. But right now we're having a great deal of volatility, which is what we love to see. Just the fact that I'm not involved in the gold market or the silver market is a little frustrating. But we've had a really nice run in some of the currencies, and the downside in the stock market. In fact, we had an order for the 24/7. We had an open order in on IBM to sell it at 153.11, and it hit 153.20 yesterday. So we were able to get a little short on that. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.